Uh, we're here today with Shawn with RCIS. And Shawn, do you want to tell us a little bit about yourself?
Yeah, I'm the marketing rep for North Central and Northeast Nebraska. And I used to be an adjuster, started out in the claims department and worked my way up into the sales and marketing role. I'm here today. We're going to talk, Rich, we're going to talk about hail and some of the products we got. Rich, you got some questions you want to start with?
Yeah. First off, I'd kind of like to talk about what the main types of hail insurance are. To me, there's about three main categories, and you kind of discuss them and maybe where they would fit in somebody's plans.
Yeah, the three main types that are out there that are sold are your deductible plans. They're like your basic plan, which is zero deductible, then a 5 and 10. And those products, it takes like a 95% loss for you to get all your money. You can get up to a 20 deductible on them, but you're covering, depends on your deductible, you're covering the bottom end of your crop. Then there's the comp plans, they're called, which are a companion plan, but most popular is a comp 2 or comp 2 plus. And it can be a 0 deductible or a 5 deductible. And it starts out as if you have like a 20% loss, you take it minus 5 times 2, so it'd pay you 30%. And it totals out, you get all your money back if you have a 55% loss. And it goes all the way up to like a comp 5, and it takes it times a 5 factor. So if you had a 20% loss, you factor that out, and you're going to get your money back a lot faster. And the other type, which is the most popular in Nebraska in our area, is the hail production plan. And every company has a form of hail production plan. And what that is the fastest paying plan from a 0 to 20% loss. And 90% of our losses in Nebraska are 20% or less. And it's more like 10% or less is our losses in Nebraska. So that's why that's such a popular plan. And the way that one works is you take your APH, and like, let's just say you buy the HPP 120, you times your APH times the 120%. So if you have a 200 bushel average, you're going to be guaranteed 240 bushels on your hail. And the way that works is the adjuster is going to still come out and adjust it just like they normally do, find a loss, and if you have a 10% loss, then that is the most you're going to get, but they're going to take it off your bushels then. So you have a 240 bushel guarantee. If your production is below, let's say it's a 226, if it's 226 down to that, it'll pay you from 240 down to 226 on that HPP plan. And then you can outgrow it unless you buy the guaranteed first 5. So we also have that on there where the first 5 of your loss, you cannot outgrow. So if you grew 270 bushels, you'd still keep all your corn, and we're still going to pay you 5% loss on your plan. You anything else to add to that, Rich, on those?
No, I just, just thinking about where we sell these different policies, where they each fit in. Like basic, it seems like where we primarily sold the basic plans or basic with deductible is where the multi-peril people have low APHs.
Yeah, it's where you really want those plans where you're not growing, where you're growing more than your APH. So like, let's say your guarantee hasn't caught up. You don't want a hail production plan if that's the case, because the companions and the comps and the basic plans will be a lot better for you, because you're like right now in the last 5 years, a lot of guys really increased their yields on beans, and if you get a loss, you're more than likely going to outgrow that 120% because your averages has not caught up to what you're growing yet. So that's something like Rich is going to analyze on your policy to see which one fits better for you. Because even though the HPP pays the quickest and the fastest, if you're growing 80 bushels or 75 bushels of beans every year and your APH is only 55 or 50, it's not a good plan for you. You're better off having a basic or having a companion Comp 2
Yeah.
plan on there.
Yeah, there's some people where the APHs were really below. We had one client where they hadn't raised corn for 15 years, so they had like a 140 APH and were raising 200 plus corn.
Yeah, the yields on corn in the last 10 years just gone crazy, and just compared to 10 years ago, just with genetics and farming practices. And we've really, as a state, we've really done a good job of growing corn. And if your APH hasn't caught up, yeah, we need to find you a different kind of plan to cover that hail losses.
Then on the straight basic plan, or situation where we've had that fit in was where it got into a sod buster situation where they didn't want to buy multi-peril, so they would just cover it with hail. But they've changed the rules on sod buster now, so it's a little different situation. But that's 65%.
Yeah, there's still a few guys out there that don't buy multi-peril insurance and just buy hail.
Yeah.
And hail and wind.
Yeah,
not very many of them left.
We've got a neighbor that doesn't buy any multi-peril or hail. That's pretty risky.
Yeah, well, he's probably got a couple years worth of corn sitting in the bin.
Yeah, I think they got quite a few cattle too, so it's maybe not as big a percentage of their total income. So we're on when we get into the wind situation, kind of describe the wind policies, wind and green snap policies, and different variations.
The wind policy's been a great. Everybody's used to the old green snap policy where you had to have it broke at a node, and you had to have 10% deductible. You had to meet that first, and it ended in September. Well, in the last few years, we've come out with this corn wind policy that goes all the way till the end of October. It goes October 31st. It covers those late windstorms. It's been very popular. It's a very farmer friendly policy because we've had in the last 6 years a lot of storms on that harvest ready corn, and this is the policy that covers that. It's a form following policy. So let's say you buy a basic policy, which is a zero deductible, then your wind is going to have a zero deductible. If you buy a Comp 2 policy, which has a 5 deductible, then your wind's going to have a 5 deductible also. And then for the hail production plan, it has a zero deductible on the wind, and they work together. So if you have a 4%, let's say you have a 2% hail loss and a 2% wind loss, your total loss is going to be approximately 4%. It might be a little bit because there's a factor involved in there, but they work together, and they pay you together on that. And so it's the way the corn wind works, the wind policy versus the old green snap is, it still pays for green snap. So if you have them fragile corn losses where it breaks it off and it's unharvestable, doesn't produce an ear, it covers that. But the big difference is in the fall, when you have that late season wind right before the combine goes in, and you're knocked over those stalks and they're unharvestable, we're gonna come in behind the combine. So the combine's gonna go out, and let's say October 15th, we have a really bad windstorm and you're not done harvesting yet. We're gonna let you combine that field. The adjuster's gonna come out and count out 500 stalks per count, and they're gonna count how many ears are on the ground on there also. So you'll have, let's just say you have 10 out of 100. That's a 10% loss on there. And there's no adjusting. That's what I like about it at that time of the year. There's nothing to be adjusting. It's just math. If you can count to 100, you can figure out if you got a loss or not. You're just counting ears on the ground. So, but it still covers everything else from emergence all the way till October 31st. So if it snaps it off as it's 8-leaf plant and kills it, we're going to pay for it on there.
So some policies are not form following. So that's something a person has to watch for when they buy a wind policy, to make sure they understand how it's adjusted.
Yeah, there's a big difference in wind policies between companies. You might have bought a wind policy from brand X, but their end date is October 1st, and ours is a whole month later. And if you want the month later, you have to pay more. So you just got to make sure you know what you're buying, because they'll have a price for October 1st, a price for October 15th, and they'll have a price for October 31st. but we just have one price. It's
Right.
just October 31st is the win price, and that's the
But
only thing we got.
there are some policies are adjusted more like a basic plan too, where instead of instead of following what you buy for multi-peril or for the hail,
Yeah,
it's more of a basic situation.
yeah. They don't do the multipliers like if it's a comp 2 or an HPP. That's like a comp 2, you whatever your loss is times 2 basically. If you bought that hail policy, that's what your win's going to be. But if you bought that, if they don't have that, then you're just getting paid $1 for 1% on there, 1% on there, and that is not apples for apples on there. And that's one thing you got to look at when you're looking at your policy, is ask those questions and see how that win policy works. Because there's a lot of them don't go out after. Some people don't go after the combine either. They're going to go out and try and make an adjustment of what's harvestable and unharvestable in the field, why it's still standing. And that's a lot of guys like going after the combine, because if it's not on the ground, then that means they got it in the combine. So one other thing on HPP I wanted to point out I forgot about is on the hail production plan, it goes to harvest to see if you get a loss, but we're not going to come out and bug you again and measure bins or do anything like that. We're just going to go off your signed production report. So when you report your production, if you don't have a federal crop loss and it's just a hail loss, we're going to take whatever you tell Rich and you sign that form, that's the production we're going to go off of. We're not going to come out and bother you again and with another adjustment out at your place and measure bins or look at scale tickets or anything like that. It's just going to go straight off the production report.
So that's one advantage to the companion plan, is that on the companion plan you are paid. You don't have to go to harvest on the companion plan.
Yep. And that's the difference. That's the one thing about the HPP is you have to wait till harvest to get your money, but all other plans we're going to pay you right away with the straight basic plans or the companion plans. As soon as you sign off on there within a couple of weeks, 10 days to 2 weeks, we're going to have your money in your bank account on there.
Yeah. So when some adjuster comes out and adjusts the field, the farmer is supposed to notify us within a certain amount of time after a hailstorm. And then was it typically a 10-day delay between the storm and when the adjuster can come out?
Yeah, they really want to wait 10 days on most all storms because they want to give it a chance to die. That's the main reason. A lot of people get confused why they want to wait, because they say, oh, it looked way worse before. Well, you're just waiting to let it grow out. Well, no, the damage is still there. It's always going to be there. But the reason they wait is because there's lots of times, especially on beans or small corn, that plant could die. And if we go out there right away, it's going to be still green. But if we wait 10 days, then that damaged tissue on the plant's going to be turning brown, and we can tell what's going to be viable and what's not going to be viable.
So when the adjuster comes out and he's with the farmer, what happens if the farmer agrees with the adjuster? He can sign the form at that time, and if he doesn't agree, what would the steps be?
Well, if he doesn't agree, it's always your right not to sign, and we can get a reinspection done on there. And so we'll get another person higher up to come out and look at your field with you again and go over it and see if there was a mistake made or if it was right and explain why. But that's your right to have a reinspection done if you don't agree on there.
But once you've signed the form, that's a sign. You're signing that you agree with what the adjuster
has
come up with. So at that point, if you're not in agreement, then it's a situation where you wouldn't want to sign the form.
Yeah, you wouldn't want to sign then. There are steps. I mean, if there's something really, really bad that's way off, but if you've looked it over and you agree with them, then we pretty much we're hopefully good to go. We can finish out the claim then.
Okay. For the last several years, we've seen a considerable jump in hail and wind rates. Could you kind of describe what's driving that?
Before the state mandated last year that you had to charge a minimum amount for your hail. And before that, they had no mandates. It was a free market. You could charge whatever you wanted to, and the state figured if you were gonna, it was good for the farmer, which it was, that you could, price competitive on stuff. Well, what happened was a couple years ago, a company went bankrupt and left a lot of policies standing that weren't covered anymore, and they didn't, and so that got the attention of the national, of the feds, of RMA, who oversees all the programs, and they came in and said it's if you're charging less than what you're actually supposed to charge, that's rebating. And so they've told the state, either you take care of it or we're going to come in and take care of it. And so the state came in and mandated you had to be within 75% of the recommended rate. And if you want to be at the 75, you can, or if you want to be higher, that's your prerogative. So that's what the drastic increases were for. And what was driving the low prices before was we'd get a new company would come in and charge half the rate of everybody else, and hoping to get business, which they did. And then if they got in trouble, then they'd leave, or they went bankrupt. And that's what was driving it, was the volatility. It was the insurance department doesn't want people that buy a policy, that company, to disappear. And so that's the reason they mandate rates, is that you have to prove that you can pay losses charging that much, so that a policyholder doesn't get stranded with a policy that's not worth anything.
So the insurance companies have been actually losing quite a bit of money on hail and wind insurance.
Yeah, they're in Nebraska. Nebraska is the state that hail is the most important in of all the states, because we do get so much wind and hail. And last year alone, the wind policy had a 280% loss ratio on there. And that's the reason wind rates went up this year, is because for every dollar that we took in, we paid out $2.80. And so that's caught the attention of the insurance department, saying, how are you guys going to sustain that? And they're looking at mandating higher wind rates later, but they haven't done it yet. So we're hoping they don't, but we got to try and get so we're breaking even a little bit, so that we can keep the government out of the decision making of the pricing on the wind product.
So are these rates going to get so high that farmers can't afford to buy hail and wind insurance?
If they mandate what it's supposed to be sold at, it's going to happen, because that happened in Iowa last year. They mandated that you had to be what the recommended rate was to pay claims, and half the people didn't buy it that did the year before. Then they had that massive wind event that just destroyed everything over in Iowa. And the loss ratio was, they basically paid out every dollar that was out there to pay. And so the loss ratio is still huge over there. And so that, yeah, it's, if they mandate the wind rate, it's going to make it so nobody can afford it, basically, on the wind part of it.
So what's going to be the options for farmers with that when that happens?
That's the guys are going to have to make other kind of decisions, like, do I want to buy a higher level MP to help cover my total bushels? A lot of guys around this area have been doing 60% MP and then buying a lot of wind and hail, because the only real they didn't have to worry about drought because you can turn the water on. So their biggest perils were wind and hail. Well, if they take wind away, you're going to have to make some different decisions on there, and get creative on how you're going to cover that crop. There are private revenue products out there where you can get up to 95% of your APH, and out west, where hail is way higher than it is in our area, around your area, Rich, they don't buy a lot of hail out there. They buy higher level MP, and they've been looking at these county revenue products and individual revenue products that get them up to that higher level MP. So APH coverage.
Yeah, you were discussing before. You said most hail losses are actually less than 10%. So
yeah.
Are farmers going to, or could you see policies coming out where farmers stand some of those lighter losses in a 5-10% area, and and then cover a
Well,
little
like,
bigger
right,
loss?
yeah, there's still going to be that, 10% and 5 deductibles in the comp policy. They're still always going to be there, and I think they'll be affordable. So like a comp 2 plus is still a great policy, which you can get a 0 deductible on, but it just won't be able to attach wind. But to get that wind coverage, you might have to look at like an optional unit private revenue product. Like we have this revenue price protection where it covers from that up to 95% of your APH. So the farmer's gonna have pay the first 5%, and then that product would kick in if they had more than a 5% loss on their average, and then it carry down to when their federal crop kicked in.
Yeah. What about deductibles like on the production plan?
Yeah, I look at guys maybe going back to, as the price keeps getting higher, they're gonna maybe do percentage of price, lower the percentage of price, or go ahead and take off that guaranteed first 5 and go back to where hail production plan started, which was with a 5 deductible, because you got 120% of your APH guaranteed. You can afford to maybe eat 10 bushels off of 240 and then start collecting at 230, or if you had a higher guarantee on that part of it too.
So going down the road, it's going to be the hail and wind insurance is going to be a little harder decision. A few years back, it was kind of a no-brainer. You just took it.
Yep, you just took it when the price was cheap. You just took it because it's such a farmer-friendly product. Hail production plan and wind. I've been telling people you buy it until you can't afford it no more, because it's the best product out there for the farmer by far. The most farmer-friendly. You look at loss ratios of the last 10 years. Overall, the companies have not made any money on it for 10 years. They've lost money every year. So I would say that's a pretty good bet if you're playing the odds on there.
So as we go down every year, last 3-4 years, it seems like the decision's gotten a little tougher to make. So we'll probably continue that trend.
Yeah, I think as we go, it's that there's going to be a lot more math involved and putting a pencil to paper and saying, how are we going to make this work? And we're going to have to get creative on some of our ideas on what to do with it. And, this year, I think it went up. Wind took a jump, but I think a lot of people are still going to take it, and because it's just such a good product.
Yeah. So, okay. I think, is there anything else you'd like to cover here today, Shawn?
Well, I just, if you have any questions, give Rich a call, and if he, or I can, I sure would be more than glad to talk about stuff. If something didn't make sense, I'll sure be glad to go over it with you guys too. If anybody wants to call me personally, and Rich can give you my number. Yep. No, I think I'm good, Rich. Thank you.
Okay. I get, like Shawn said, if you have any questions, be sure to get a hold of us and we'll pass them on and we'll try to find the answer. As we talked about here, these decisions are getting a little tougher all the time. So